What's up, guys? Todd here from Trading Analysis. So, just about to go on. We're going to do Amazon, we're going to do Netflix. One thing I wanted to talk about was a chart that Jeff Kennedy put up. He did a really good Lululemon chart. I want to actually, in between commercials, I'm going to go over and try to execute this thing live. Love the Elliott Wave setup. Market seems to be stabilizing, so in between the break, we're going to go trade the options market. All right, showtime. Gotta go.
Look at this monster.
Your Schwartz is bigger than mine.
As far as the charts go, which one looks better, Amazon or Netflix?
Yep, I have to agree with Mark here. From a relative point of view, if you just look at what's actually happening in the markets rather than what should be happening, according to fundamentals, if you look at the relative ratio here.
But just quickly, Todd, since we have you, I mean, with Amazon at a record high, the chart doesn't necessarily look bad, though, for Amazon at this point.
Absolutely not. I have the trade on, and in fact, in Trading Nation on the online show, I put the long trade on live. Yeah, so Lulu, again, is at a nice wave. I believe it's coming up on a wave 4 completion that should be able to head up to wave 5, which completes a larger third. So I think we need to be long, but also I'd like to put on a butterfly to kind of not get so directional, but take in some premium. Volatility is very high. So I like this chart. Good job by Jeff. So I wasn't able to execute the trade during the commercial break. It was just too much happening. So I'm going to do it now. So here is Jeff's great work here in Trader's Classroom. I think this was February 22nd, where he was talking about Lulu and Amazon. Really good wave counts.
My name is Jeffrey Kennedy, and welcome.
The Amazon trade I already had on, so I was like, oh, cool. And I forgot to mention that at CNBC, but the Lululemon I got from him was like, wow, that looks like a good one too. So we're going to go execute the trades. Thanks for the setup, Jeff. Be sure to check out his work. Does great stuff. And let's go do it. Amazon's really pretty straightforward. We'll start off with this one. We're holding in very well, knocking on the door to 1,500. Really just looking for a wave 5 move up, get up to 1,700. So you can see really pretty straightforward, nice blue 5-wave move up from September 2017. We're looking for just a little wave 5 move. And what was great with Amazon, when the overall market really took a dive, Amazon just showed some really good relative strength. So I used it as a long hedge. I put the trade on with our subscribers here. Where are we? Trade Desk right there. The Amazon trade went on 220. So we took in $2.01 credit. We did a put credit spread, which if you sell a put, that becomes a bullish trade. So we're long with the put credit spread, just looking to get the move up through like 1,700 area. And here's the actual position. What we did was we sold the 1,550 put, bought the 1445. That creates a bullish situation. That is a delta of $8.11. What that means is if Amazon goes up $1 in the stock, we'll make $8.11 in the options spread that we have on. Now that delta is going to change, which is gamma, but a little bit more confusing option deltas or option Greeks, but that's okay. So that's the trade. We're up some good money on that one. We're going to continue to work that one. So here's the Lululemon chart. This is the daily. And what you'll see here is we have one more wave 5 move that should complete a higher degree wave 3. At that point, we should then fall into 4th wave consolidation. So I don't want to get super directional, buy options, be long the stock. I want to put a bullish trade on, but also kind of put time in our favor. Now, this is a really good looking chart, very similar to Amazon, showing a lot of relative strength and a pretty shaky, unstable tape. So if we look at this thing here, higher degree is wave 3. We know wave 3 is a mode of impulse, which breaks down into 5 smaller waves. There we go, nice 5-wave move. If we just do two quick fib calculations on the top side, usually a wave 3 should be able to get up to 161% multiple of what we've traveled in wave 1. So that creates a target of about 93 at this degree. And then we can do a Fibonacci study inside of that 5-wave move. And I'm just going to hotkey it here. And it's crazy that the 2 green, which are color-coded, which means those are your ideal Fibonacci stopping points, that come in right at 93.06. But here's the thing what I want to do. I don't want to do a put spread like I did over there with Amazon. I don't want to buy options. I don't want to sell puts. You know, I think there's a little bit more room up. We might get the move above 90, but what happens if we go to a more shallow fib target? You know, what happens if we do something like this? You know, what happens if we only get up to like the 85 mark? So what I want to do is put on a butterfly, an option butterfly. And I just text messaged this out to all of our subscribers. We're going to be doing in the 20 Aprils. These are the monthly Aprils. We're going to be doing an unbalanced butterfly. Okay. So let me show you how this trade is going to set up. And I'm just going to execute the trade live for you. Okay. So I have it set up for you right now. Okay. Now I got to get down to the 77. There we go. Okay, so what we're going to do in the butterfly is we are going to sell 2 options in the middle. So we're going to be selling 2 of the 85 puts. Then at the wings of the butterfly on the outside, we're going to be buying 1 of the 90 puts and 1 of the 77.5 puts. Altogether, we're going to actually take in a credit right now of 26 cents. So $26 per option spread. So as I put this trade on, I'm going to get paid. Now, let's take a look at the analyzed graph here. And this is where it's going to start to make sense, if it isn't already making sense for you. So here's the analyzed graph. Now, we're bullish on Lulu, right? This trade, if you do an unbalanced butterfly, which means basically we took... So this is the body, the 85 strike, right? If you have $5 above, that's buying the 90, and then $5 below, that'd be buying the 80. So that would be a symmetrical butterfly. What we did was we kicked the lower strike down a little bit to give it this unbalanced look. What this does is it makes you a little bit more bullish, okay? You will lose more on the downside. If Lulu drops below $77.30 in expiration, I will lose $224 per option spread, option butterfly that I'm doing. Break even at expiration will be about $79.75, and then the sweet spot will be up around 85, right here. That's the high. I can make up to $508, okay? And then the profits start to drop away here, and we're looking at the profit over here on the left. So profits start to drop away. I'll make less money as we get to 88, 89, etc. And if the stock just absolutely goes skyrocketing, I'm just going to make 26 bucks. I'm going to keep the credit that I'm going to take in right now. Okay, so the sweet spot of this guy is right around 86. Now that's at expiration. But options trades are kind of a living, breathing thing that changes every day via the Greeks. So look at this purple line, okay? I'm recording this on 2/23. Watch what happens as I proceed in the future. So here's the date, 2/27. Watch what happens. Watch what that purple line does in relation to the blue line. Okay, so if we hold this thing, let's go to March expiration, okay? This is your P&L graph on March 16th, okay? Still, we have a break even at about $79.88, but this is all profit, okay? Max profit be here upwards about $70. This is all profit, okay? We have a range of 77 all the way up. Forever, we're going to make money in this trade. So you can see that's why I like these butterflies, because there's a wide range of area that we'll make money. But the kicker here, guys, this is the best part, is right here, this theta. You're going to get paid. When you buy an option, when you buy a debit spread, you are paying. So that theta is going to be negative. But here, that theta is positive. So we're directionally long, but we're theta positive, which means we're going to be making $1.58 per fly that we have on every single day. And that number is going to change as well. So this is a great way to take in some premium. And what's happening is the body of the butterfly is melting away. These 85 puts are melting away. And that's basically giving you more money than you're paying out at the wings, 90 or 77.5. So the net of the 3 legs would be theta positive. So it's aggressive. It's not aggressive. It's a little bit more complicated than what you may be used to, just buying options or doing spreads. But it's a really good way to kind of take advantage of a completion of wave 5, possibly back down in 4. What happens if we go up, fail at 86, and then mess around in here in wave 4? Okay, what if we just mess around here at 84, 85? That's perfect. That's going to be max profit. Okay. If we get going too much, if this trade is too right, we will adjust the trade. So let's go ahead and put the trade on. So, okay, Max loss is going to be $916. Max profit is $2,084. A good reward to risk ratio. Again, it's going to be theta positive. So with this, let me see. Oh, that theta is still on a 1 knot, so I'll have to look at that after. But let me see if I can get this fill. I'll take in, do my yoga pose for Lululemon. Come on, where are you? Okay, I took 13 cents. It doesn't matter. So I just took 13 cents of credit. All right, so Jeff, thanks for letting me borrow your work a little bit. Really like where we were going with there. Good luck on that Lulu trade and trading in general. And be sure to follow us at Trading Analysis. And don't worry if you're kind of newer to the options. On my service, I kind of tell you exactly what we're doing. So if you're not sure about these strategies, and when we go into a trade alert, I'll say, listen, buy the March call, buy the March call, 50 call, sell the March 60 call at this price. I kind of lay it out. So don't be intimidated if you don't understand options. As you watch us trade them, you'll get more comfortable with the terminology. And as I said, I make it very easy, so you don't really need to be afraid of these multi-leg strategies. So guys, hope that helps. Good luck. And I'll see you in the markets.